right, welcome everyone. I'm Sophia Quinn, your investor professor, and today we're going to do something a little bit different. We are going to respond to some direct comments that have been so good, and they are so insightful. You guys are so smart, and you're asking such great questions, and I would not at all be a good professor if I didn't take the moment out to actually answer these questions. So I'm not going to shout out your tag because I've already forgotten it, but if you know who you are, the question was, what are the long-term benefits of investing in stocks? Okay, that is an excellent question, and it is definitely something that we need to dive into. Okay, so they'll tell you that the overarching benefit in investing stock is wealth building and long-term investment habits, okay? Because as we dive into The Intelligent Investor and The Richest Man in Babylon, we're diving into a mindset around investing, okay? So, and it's also wealth building. So let's get into some of that. Number one is compound interest. And that is the compound growth and wealth accumulation. Just to give you guys an example, okay, that historically the S&P 500 has grown 10% per year. So just to give you an example, if you were to invest $10,000 into the S&P 500, which is your stock index that we talked about, after 30 years, that would be $174,000 without you adding any more money to it. That is the compound interest effect. And that is, we reference Warren Buffett a lot. That is how and why he's so rich, is that he had extra money. He came from a wealthy family, but he did have extra money to put into the stock market and to let sit. Okay, so that is one. That is your wealth generation. And as everyone's getting their tax returns, that is a prime chunk of money to put into the market to try to capture on some of these wealth accumulation gains, okay? 10% per year. You guys can let me know where you get 10% returns on your money. I'll wait. Let me know in the comments because it's unheard of. Okay, historically high returns than other assets. Other assets mean real estate, gold, real estate, gold, what we can say, maybe businesses returns, right? The stock market has historically more, even beats bonds. So, we did talk about bonds, and we started this whole journey talking about Treasury Direct, which are buying bonds, but that is still around 5%. Now, it's 5% guaranteed good, right? We ain't gonna slip on it. We don't hate on it. But it's only around 5%. So the stock market is up to 10% historical returns. All right. So in terms of an asset that you should be investing in, it's definitely one of them. Another reason, okay, is passive income through dividends. Now we talked about this, and I told y'all my little dirty little secret, which is that I reinvest my dividends. But if I had $100,000 extra dollars, right, and I bought a high dividend stock, because that's what you're going to be looking for, it would net me maybe a few $1,000s, or at least $1,000, right, of a month in passive income. Now, see, we have to change our mind, because I just told you if I had $100,000 to put it into the stock market. Imagine the discipline if somebody handed you $100,000 right now. Imagine the discipline that you would need to develop to put that money into a stock and then live off the dividends versus what? Spending the money versus putting a down payment on the house. A down payment on the house, because you still got to come up with the mortgage. So you understand how it ain't all, it's not all easy street, okay? Next is protect against inflation. So we talked about our dollar losing its power when in inflation, right? That the dollar ain't the dollar. It ain't like it used to be, right? Y'all remember when the little bags of chips was 25 cents? You used to be able to get a juice. Man, I used to be able to get like a meal for $5, right? That is inflation. So investing in the stock market is something that will help hedge your money against losses due to inflation. Inflation is about 3% per year. That's not bad, especially compared to other countries. You guys know other Latin American countries, I mean, their inflation is like in the 20%. It's not bad, but hey, we can only compare ourselves to us, right? It's bad for us. Also, third is ownership in growing companies. This is long-term investing. So your ability to find a company that you believe in, that you understand, and that will be profitable for you, you putting your money in there now, 10, 15, 20 years later from now, you will reap the returns. And like I said, you are the shareholder, okay? You are the shareholder. Next thing is tax advantages. And this is what we talked about when we talked about the SEP IRA and our Roth IRA, okay? That those are places where you can be putting money into that is not going to be immediately taxed. Not tax-free. There's nothing here that is tax-free. The only thing that is guaranteed in America is death and taxes. That is tax deferred, but it is a legal place for you to tax defer. Lastly is wealth generation and legacy planning. Did you guys know that your stocks can be passed down? Huge, right? Imagine buying some stocks in Roblox and giving it to you, buying it now. You don't even play, you don't even care. And then 20, 30 years later, you giving it to your kids, right? That is a valuable asset. So I hope those are some of the reasons for why long-term investing in the stock market is very beneficial. And any little bit of extra money you have, like I said, you can make this on an automatic deposit, $20, $30 a week, right into your IRA account, right into your money market, right into your stocks account. You can make that automatic. You can take the large lump sum from your tax return and actually make a large purchase of a stock, a dividend stock. And you don't have to do what I do, right? You got a few $1,000s, you buy a high dividend stock and you can get maybe a few hundred a month or 100 a month. I told you dividends is not, they not as high as people be marketing to y'all, but you can get some money back, right? So you got to change your thinking. This is long-term investing, right? So it's compounding interest from you putting your money in the stock market and riding the interest. It is historically higher returns than most other assets that you can purchase. And it is passive income that you can establish through dividends. It protects you against inflation. It gives you ownership of companies that are emerging, which will be huge for you. Right now it sounds like whatever, but 20 years from now, 30 years from now, God willing, we're still here. Those are going to be major impacts. And by that time, you 60, 70, 80 years old, and it ain't too late, but it's going to be late. Okay. And legacy planning, right? Passing these stocks down to the next generation. So I truly appreciate the question. Feel free to follow me on YouTube, subscribe to me on YouTube, Investor Professor 25. I also created an Instagram, Investor Professor 25. Follow me here. Don't follow weird bots. Don't do that. My next video, we are going to talk about another excellent question that I just received. Stay tuned.